Hey guys, we're back here for another episode of FUPS and Success, the web series where we discuss different kind of challenges and obstacles entrepreneurs face and how these eventually lead to their success. Today we're meeting with Clive Cusens, whose speciality is day trading. We're going to be learning all about this industry, so let's get right to it. Welcome Clive. How are you today?
All good, man. All good. Good to be here.
Yeah, so what's the story behind Eloquent Language? How did that start out? And what's really got you to leave 9 to 5?
Well, I started my career in language teaching because I really wanted to have a positive impact on others. And I, most importantly, wanted to travel. So I got my TEFL certificate back when I was 19 years old. Then I did my CELTA certificate, which is a further qualification. And I immediately left Malta for the Czech Republic. So at 21 years old, I was a company teacher in a car company. Then I moved to Spain, spent about 9 or 10 months in Spain. Then I moved back to the Czech Republic because I really missed it. And then I came back to Malta. When I came back to Malta, I got a degree in international relations. Then I wanted to do my master's in diplomacy, which I did at the College of Europe in Belgium. And after that, I really wanted to do something closely related to my master's. So I managed to get an internship in the European Economic and Social Committee, where I spent about 6 months. Then I moved on to the European Parliament, and then I landed a diplomatic post at the permanent representation of Malta to the European Union. So there I was negotiating on behalf of government in the Council of the European Union for 3 years. And I mean, it was an incredible experience, extremely rewarding. I learned a lot, but something was missing. Despite the nice salary, despite the diplomatic benefits and all this, I felt really cut off. As a teacher, I had the opportunity to see where my work went. I could see the improvement in my clients. When you're negotiating at such a high level, it's really hard to see your return on investment, so to speak. So I left, went to South America, for 3 months just to run around the continent and clear my head. I love traveling. And then when I came back to Brussels, I looked at my CV and it was English teaching and EU institutions, which really didn't make me sexy for the private sector. And I definitely, after having worked for a government, hierarchy and bureaucracy, the last thing I felt like doing is having a boss. So I set up Eloquent Language, looking at my experience, and I decided to focus on teaching English for diplomatic and political purposes. So I did that for a while. It worked well. And then I decided to move back to Malta. It had been a while. It had been about 8 years since I lived in Malta. I'm not talking about short-term visits. So I brought the company with me. Of course, my market changed entirely. I was swimming in my market in Brussels, but not here. So Eloquent Language had to pivot towards corporate training. We maintained the language element so that I could keep the brand, Eloquent Language, but the focus was more on corporate training. Separately, I had an Airbnb business on the side because of this book I read by Robert Kiyosaki called Rich Dad, Poor Dad, where he really advises to diversify your revenue streams. And it was pretty good. And then COVID hit and everything went tits up.
Yeah, a lot of people experience that. It's also interesting to see how you wanted to escape that kind of bureaucratic boss on top of you, and also have this feeling of freedom in you, where you enjoy traveling, you enjoy new experiences, you enjoy being in new places. Was that something that you've had throughout your life, or was that something that came along later?
Pretty much. I mean, I left home at the age of 18. I left the country at the age of 19, came back, and then left again when I was 21. I love traveling. I've lived in 5 different countries. I've traveled to over 34 others, and I haven't even scratched the surface of my bucket list. I haven't even touched the African continent. I haven't even been to Southeast Asia. So I've got plenty of countries I still want to discover. The problem with having a 9 to 5 isn't too bad. When you have a 9 to 5, you're employed, you go to work, you put in your hours and you get your money. But when you're self-employed, that changes. When you're self-employed, You tend to make more money than an employee because you get to keep all the profits. On the flip side, you have less time to spend it. A self-employed person doesn't have holiday leave or sick leave. If you don't work, you don't earn. And that was the catalyst for what led to my next project in life.
Which is trading, right?
Forex trading, that's right.
Yeah, so Robert Kiyosaki talks a lot about investing. How was that the main influence for your starting trading?
Well, that book really put things into perspective. As I explained earlier, an employee trades time for money. A self-employed person pretty much does the same. The problem with being an employee or self-employed is that you can't leverage your time. It's only business owners and investors that can make money while sleeping. Yeah, a business owner who has people working for him or a system in place can make money without his or her active input. And an investor does that with money. And I wanted to get into the investor mindset because an investor knows that if you put money in a good place at the right time, it is going to make money for you. You can be busy doing something else, like living. So I wanted, in fact, my primary driving force was I want to work less and earn more, like most people. And I want to be able to do it from anywhere in the world because I love to travel. Now I'm location independent. Now I can make money whilst traveling. In fact, last August, my girlfriend and I went to Santorini in Greece. And I told her, listen, darling, I'm going to take my laptop with me. I'm only going to trade an hour a day. But I just want to tick that box and say, yes, I can make money whilst on holiday.
A lot of people, they talk a bit negatively about day trading, sometimes even comparing it to gambling. Why do you think that is?
I think if anybody says that, it's because they don't do it. So, yes, you can make money quickly, and yes, you can lose money quickly. But what is gambling? Gambling is throwing a wild guess, rolling the dice. Trading is not gambling. If you know what you're doing, you can analyze the markets. Will you be right 100% of the time? No. If any trader tells you they've never lost money or never blew an account, they're probably lying to you. But it is a calculated risk. So I don't trade my time for money, I trade risks for profits. So I know what I'm getting into, I know what I'm willing to lose, and I know what I stand to gain. And I don't do this by rolling the dice, I do this by learning, analyzing, and then carefully taking a trade. I spoke to someone recently about joining my trading team, and he told me, yeah, but I invested in Bitcoin back in 2017 and I lost a lot of money. And I asked him a question, very simple question. Okay, did you do any courses in trading or crypto trading? Like, what led you to buy? And he told me, well, everybody was talking about it at the time, so I bought. And as soon as I bought, it crashed. We're talking about the 2017 crash. So, my advice to people is, if you don't know enough about it to think that it's gambling, well, look into it. There's plenty of free resources you can find online.
People also, they make the distinction between day trading and long-term investing. What is the difference and do the risks compare?
Right. With long-term investments, let's split it this way. I'm not going to talk about stock trading and forex trading because you can also trade stocks nowadays as derivatives. But let's go back to the traditional form of investing. You buy a share in a company, you buy stock, okay? There's no leverage there. You're not magnifying your profits or your losses. Now, that tends to go up and down gradually. When I speak to friends of mine that have invested in stocks, they look at returns of between 5 to 12% a year. When you day trade using leverage, okay? In the case I trade, in the way I trade on contracts for difference, CFDs. That allows me to get a leveraged account. What is a leveraged account? It will magnify your profits or your losses. So I can make 10% a day, or I could lose 10% a day. This is the difference. The only reason that I don't lose 10% a day is because anytime I trade, I know in advance what I'm willing to risk. And personally, I risk 2%. And I only risk 2% if I stand to gain at least 4%. If I don't have a risk to reward ratio of at least 2, I don't take the trade.
It sounds a bit more complex than long-term investing, because I guess long-term investing, you could look into a single company over a long period of time and then take an educated decision that way. When you're trading by day, you're obviously making decisions more on the fly. So could that be something that's maybe it's not for everyone?
Look, anyone can learn how to trade, but it's not for everyone. So long-term investors, that's something you could consider is more like passive income. That's putting money in and just hoping that the stock goes up. The only way you're going to make money is if you buy low and sell high. When you trade in the way I do, you don't actually need to own the asset. So I don't physically own gold. I don't have gold in some wallet somewhere, but I can sell it. I can predict that. I can tell my broker that I expect the price of gold to lose value against the dollar, and if it does so, I get paid the difference. So it requires some time.
Do you focus on any particular part of the market, or are you into cryptocurrencies and other classes like currencies?
So originally, I only traded Forex, so currency pairs. I never even entered exotics, such as exotics are non-major currency pairs. Example, US dollar, Hungarian forint, US dollar, South African rand. Those are known as exotics. So initially, I didn't trade those. I just stuck to the currency pairs that everyone is familiar with. The difference being, exotics tend to move much faster. So there was that. I later upgraded to gold and oil. Throughout most of last year, I was trading indices, so the Dow Jones, the Nasdaq 100, the S&P 500, and only this month, the beginning of February, is when I actually started to trade cryptocurrencies the way I trade Forex. I feel I should make a distinction here. Back in July last year, I invested in a crypto portfolio as a buy to hold. So this is not the way I normally trade. This is me buying something at a price and just sitting on it and waiting. So I bought a few €100 worth of Bitcoin when it was valued at $9,300. It's now up in 5 figures and then some. I know price came down today. I haven't been looking at it because I'm not in any CFD trades on that. But I mean, until a couple of days ago, Bitcoin was close to $53,000. So that is definitely a gain. My only regret is that I only put in a few €100 at the time. I just wanted to test the waters.
Yeah, well, I guess if you never got into trading, you'd have never really even explored that option, right?
Exactly. I mean, when Bitcoin came out, I was a broke student. Had I invested €1,000 then, I'd be retired now, and then some. I think I remember Bitcoin being something at like 12 cents a coin. We're now talking about 53,000 a coin. I've recently invested into a coin that hasn't hit the market yet because I'm hoping for it to be one of those. You know, its valuation now pre-market is 3.5 cents per coin. But I now have about 44,000 of these coins. And we'll see. It's money I'm prepared to lose. And that's the mindset you need to have.
In the past year, you obviously, well, not obviously, but you've had to go or you chose to go full time into trading, right?
Yeah.
What has that experience been like, and what's been your strategy and help you along the way?
So first of all, as I made abundantly clear earlier, I needed to learn. I knew nothing about trading. My qualifications are in diplomacy, communications, and languages. So I don't have a background in finance. I never wanted to be a trader. I never thought I'd become a trader, but a friend of mine showed me this online academy. I was a bit skeptical at first, I'll admit. It sounded almost too good to be true. But I thought, you know what, screw it. Let's give it a shot. It's not going to break the bank. Maybe I'll learn something. Maybe I won't. Either way, I'll have learned something about Forex and I'll have learned it's not for me. But that was back on the 2nd of July 2019. And here we are, February 2021, and I'm talking to you about it. So I'm still in this. Not only have I learned a lot from this platform, but it's given me access to live sessions with professional traders. So I get to watch them trade, learn from them, learn their strategy, and then practice it myself. Has it always been like plain sailing? No. When I first started, I lost a lot of money, but it was demo money. That's another thing I like about Forex trading. Whilst you're still learning the ropes, you can practice with a demo account. In fact, I wouldn't recommend anyone puts in real money until they know what they're doing. It's like learning to fly a plane on a simulator instead of actually flying it. So there is that facility, which is good. And then once you go live, once you put in real money, again, I would advise people to put in a small amount first, just so they can get used to the feeling that it's suddenly real. Because trading on demo, you don't really care if you hit a stop loss. And you're more than likely let a trade go all the way to your projected target, your take profit. When you're on live, everything changes, because suddenly it's real, suddenly it's emotional. And the worst thing a trader can have is emotions. When you trade, you need to be confident in your analysis, and you need to learn to let it go. Because a lot of people believe that trading involves staring at your screen or staring at several screens for 10 hours a day. Not the case. A lot of the professionals I follow trade 2 hours a day, 3 days a week, and that's it. That's all you need. If you think about it, if you took one trade a day and you knew that trade was going to hit its profit, and you risk 2% to make a minimum of 4%, if you took one trade a day that went right and hit its intended target, that's 4% a day, Monday to Friday, that's 20% in a week. 20% a week. Now, of course, we don't always have a trade that goes the right way. I tend to take 2 to 3 trades a day, expecting one of them to go wrong, one of them to hit break even, and one of them to go right. Is it always the case?
So these kind of ads that we see, which tell us like, take this course to learn how to trade. Do they work? What?
Well, I definitely can't speak on behalf of all courses. I know that there are some rubbish courses out there, and I know there are some great courses out there. And I don't want to use this interview as an advert for my team or the platform I use. I'm just saying, do your research. There are free courses, but again, I mean, look at it this way. If you needed a doctor, okay, would you go to the one who was educated through free courses, or would you go to one who was educated at a prestigious university? When it comes to learning something, definitely there's a lot you can learn for free, and you should. You should, but use that as a crutch to then get yourself into something more organized. There are a lot of scams out there as well. I mean, I personally fell victim to one. I paid a few €100 up front to a company in another country that said that they would send me trading signals. And they did. I paid for a full year. They sent me trading signals for about 2 months, and then they just stopped. And I wrote to them, and they just ignored me. And they're still active. They're on Instagram and whatever. But I lost my money.
I've actually seen a YouTube video. One guy subscribed to a number of these signal providers, whatever you could call them, and he was actually putting in real money according to the signals he was receiving. And from about 5 that he tested, 2 or 3 were actually working out well, and 2 of them were complete rubbish. So it makes sense that it was like that for you also.
Yeah, the problem with signals is that someone is feeding you the answer. Now, with the platform I use, I'm learning how to figure that answer out on my own. The whole point of what I do is to become an independent and autonomous trader. So signals are fine. They could supplement your income if you're doing this full time. But yeah, if you only took signals without knowing why they can get this.
Well, not exactly signals, but also a similar concept that we've seen that becoming quite popular is social trading. I think there are apps like eToro which have some elements of social trading. It's also a kind of a phenomenon that's become popular in the past month or two. What do you think about how things have been?
Well, again, without specifically mentioning one company or another, because I prefer to cover my back, especially if this is recorded. But look, there are platforms out there that can trade for you. They have bots. And a bot means that's an algorithm that takes trades for you. The plus is that all emotion is removed. Fantastic. That's what you want as a trader. The downside, and again, please don't consider this canon law. I'm saying this based on my experience. The downside with bots, in fact, before I joined the platform that I'm on now, I was actually interested in one of the platforms you mentioned. And I was looking at the bots, and the bots had consistently good results. So you have exponential growth, which is exactly what you want in trading. But if you keep watching long enough, when it drops suddenly. So it blows its account, which to me tells me one thing. The risk management of that algorithm is rubbish. I don't mind losing a trade here or there. I expect to. Again, today, fortunately, I wasn't in Bitcoin trading derivatives, but Bitcoin crashed and then came up again. It did this yesterday and it did this again today. And I believe yesterday, about $4 billion were made in court liquidity, thanks to people crashing out on their positions. Market manipulation happens. If you don't use a stop loss, that's a recipe for disaster. I had a girl in my team who bit my head off. She held me personally responsible for losing a 4-figure sum, real money, in Forex. And I'm like, how's that possible? I was in the same trades you were in. We trade as a team. I lost €100 on those 2 trades, 50 per trade. And I'm like, 1 second, you didn't use a stop loss? And she's like, don't talk to me about... Well, that's the thing. This goes back to your question, is it for everyone? Anyone can trade. But if you know what the rules are and you choose not to follow them, then accept the consequences of that. So this is why it's very important to use a stop loss, and this is why I feel, personally, that these algorithms, don't use them. Meaning, when things go horribly wrong, you could blow an account.
Okay, so Clive, you're obviously working independently, and the goal is to be able to be location independent and to be self-sufficient. But you've also mentioned to me in the past that you consult with a mindset coach. You also work together with part of a team. How does that support your journey? And what kind of advice would you give to people maybe interested in day trading?
So, with my team, essentially my team is made up of subscribers to the same platform I'm on, okay, that have joined through me. And I look after them because I have an interest in looking after them. Personally, I learned a lot on my own through stumbling in the dark, and it cost me, first in demo money and then in real money. So it was also very important for me to keep learning and keep developing. Fortunately, as part of the organization I'm part of, I was assigned a trading coach. So I have my own trading coach, and he's now my team's trading coach. In fact, he'll be talking to us next Wednesday evening on our team call, weekly team call. And you learn a lot, not just about trading. Trading is very easy. If you think about it, trading is 20%. Mindset is the other 80%. Common mistakes for people is to get emotionally attached to a trade. And by this, I mean removing your stop loss, that safety net that I was talking about earlier, in the hope that price will come back. So let's say I'm expecting the price to go up and it starts coming down, and I remove my stop loss because it's about to get hit. So now I'm down, I don't know, let's say I'm down €50. I remove the stop loss, and a few hours later I'm down €200. Now, I would have lost 50 and that would have been the end of it. But because I was hoping that price would come back, I'm now 200 down. Now, would you close a position when you weren't willing to lose 50? Would you be willing to lose 200? Most likely not. So you'll probably either double down, expecting a retracement, price to come back even temporarily, and try to make it back on that. And that's how I blew my first account of real money, hoping. You shouldn't do that. So you need to learn to be disciplined. You need to learn to say, okay, this is my stop loss, this is my cutoff, and if it hits, it hits. I don't care. It's 2% of my account or it's 1% of my account. It's up to you to set the risk. So that's number one. 2, you need to be disciplined. I mean, I check the news, and there's a site you can check financial news, and I'm not talking about articles and so on, so there isn't plenty to read. It's an article that lets you know that today, at this time, some important news is coming out that might affect this currency, and it's got a red folder next to it. So if it's a red folder at 3 p.m. on GBP, I'm not going to trade the sterling anywhere around that time, because red folder news can significantly move the markets up or down. So I check the news, then I do my chart analysis, then I find the trades I want to take. In my case, because of what I'm willing to risk and how much I'm ready to lose in a day, I won't have more than 5 trades open at any given time, because that means that if all of them go to hell, I've lost 10%, which I'm willing to lose. If all of them go my way, I make 20% in a day. So I never have more than 5 trades running at a day. Something I still struggle with till today, a year and a half years later, is over trading. So many times, and I've discussed this with my team so many times, I wish I would always practice what I preached, because I'm very good at telling my team what not to do, but I sometimes have difficulty sticking to that myself. So over trading, there have been days where I made 10% whilst I was still in bed. So a wise trader would say, that's it, I'm not trading, I'm done for today. I've already hit my target and then some, so that's it. The devil on the other shoulder tells you, you made 10% and you're still in bed. Why don't you get out of bed and make another 10%? And this has happened to me a number of times now, turning a 10% profit before midday into a minus 2% loss by 6 p.m. What have I gained? Nothing. I've lost money. I've spent more time trading when I could have been gaming, or swimming. So no, these are the two.
These are the temptations that I guess results in people having bad experiences, and then of course talking about them too.
Definitely. The third and perhaps most common one is over-leveraging. So as I said, leverage will magnify your results, whether those are wins or losses. So I had a team member, my team. She took my advice and only put in a small amount of real money. So fortunately, it wasn't too much. And she over-leveraged. So she had 200 euro in her account. She used a lot size, which was much bigger than she should have used if she only wanted to risk 2%. In a few minutes, she made 40 euro. So it went her way. 240 euro. 200 to 240 euro. That's a big thing in a few minutes. She did it again, 280 euro. And then she did it again, and she blew her account. So over-leveraging is really dangerous. I'd never recommend it, but that is one of the most common things. So I think to sum up, I'd say discipline, removing emotion, checking the news, and not over-leveraging. Those are the 4 key bits of advice that I'd give any budding trader.
Okay, thank you, Clive. That's about all the time we have left for today. Thank you all for watching. We've heard a lot about day trading and how you can really follow the advice of people like Robert Kiyosaki and get involved in a social phenomenon that's now available to the average person. So hope you stay tuned for the next one. Thanks for joining us and good night.
Thanks for having me.